All right, what's up, guys? Just wanted to drop a quick video. I just want to explain some concepts and maybe a couple of terms to just let everybody know really what it means to invest, especially since the climate of the season that we're in right now, as far as financially. Everybody sees this pandemic, this epidemic outbreak from the coronavirus, and of course, it is making the market spiral out of control. So everybody is talking investing, which is very good. I'm glad, because we all need to be invested. However, we need to know certain principles, certain concepts that will help us understand exactly what we're doing, instead of just saying we're investing or we're buying stock in so-and-so. So first, I want to talk about what a crash is. So a crash is when the market declines over 15%. So when the amount of the market or a stock that you have, if the price or the value of it goes down 15% or more, then it's considered a crash. Now, a crash can be looked at in two ways. And one way is good, one way is bad. It just depends on what side of the coin you're on. So a crash is bad to where, let's say, I'm invested in the market for 40 years, and now the market crashes right when I got a lot of money in there and I'm about to pull my money out. So let's say 15-20%. Well, if I got $1 million in there, then I just lost $150,000. So that's where a crash would be bad. It's all about timing and perspective. Now, as far as investors just now starting, less than 10 years in the game, a crash can be a very, very valuable opportunity for you to get what you want. As far as the businesses that you want to invest in, get them at a very, very discounted price, where the value of the business is lower than you'll usually see it or whatever. So let's just say you wanted Coca-Cola, and you never would mess with Coca-Cola because their prices were so high, and Coca-Cola went on, let's say they were $50, and the market crashed or the market tanked, and now they're on sale for, let's say, $25. Then now you got a 2-for-1 going on. So that's a good opportunity for you, because now you can buy more stocks. You can buy more of a position in that company because the prices are down. And a crash or a recession, none of that stuff lasts forever. So once things come back to the regular playing field, the money that you've spent on here down to get a lower stock, when it gets back to and the market settles, then your money's going to be back up, because you're going to get basically a profit because you bought something so much cheaper. Kind of like getting a house with getting a cheap house, and then once you buy it cheap, now you got a lot of equity in it once you fix it up and it's worth more. So basically the stock will be worth more, when the market settles, than when you get it at a crash. So that's two things to think about when you're talking about a crash. It's bad for the guy or the girl or whoever, or the company that has been invested in this company for years, and they're ready to just pull out, and you have a lot of money in there. When those percentages start to add up, it's good for young investors who are just now starting, because now I can really not just nickel and dime my way up. I can kind of build a strong little position in a company. So the next topic, bull market. You hear bull market and bear market. Bull market is when everything is going up. The S&P, the Dow, all that is just going up. People are just buying stocks all the time, buying and selling, and the economy's in a good position, and it's making money. We're not losing money. That's a bull market. So when you hear people say bull market, that's what they mean. conversely, a bear market. A bear market is when you're probably in a bear market coming off of a crash. So when nobody's buying the stock, when nobody's buying stocks, the whole market is in what you call a bear market. They use the bull and the bear. The bull charges, so the bull causes things to rise and the bear scares things off. So when you're in a bear market, people are scared to buy, so they're just selling off everything. So now that we've gotten those three terms out the way, let's talk about what you might be thinking or what you should do right now. So the market is hitting lows. Some of these companies are hitting 52-week lows, meaning that's the lowest it's been in 52 weeks. And those are usually indications of a buying opportunity. Because remember, the name of the game is buy low, sell high. I'd like to buy a stock at $1 and sell it for $100 a share. Make sense? So for people who are investing right now, who have some skin in the game and have some shares, well, this is the time to lower your cost basis. And that just means the average price that you paid for your shares. Lower your cost basis by buying more shares now. Because now you can increase your position for a discounted price. And the people who haven't been investing, this is your opportunity to get in now. So now you can get in, and you don't have to get in with just say 20 shares or something. You could actually get in and make a nice little impression and impact on the market and your finances. So I would encourage all of you, don't just invest in something just because it looks popular. Do your research, but invest in something. I just would encourage you that this is the time. However, prices will go down more, because I do think that we may or may not be on the brink of a recession. If they are, then prices will go down farther. But where you're at now, it's not a bad time to get in the game. Because, like I said, when the market stabilizes, let's just say this company, Coca-Cola, I just told you $50 and you bought it for $25. Well, when it goes back to 50 and up, then you've pretty much doubled your money. And not to mention the fact that they provide a dividend. So also look into that too. Companies that are providing dividends right now, you can get them for cheap and you can still get the payout from the dividend. So think about that, and keep your mind just focused on investing and not worried about the panic of anything like not having enough toilet paper or anything. Because long-term investors like you and me, we're gonna go through a couple of recessions, a couple of economic hard times, uncertainty due to election years or whatever. But if you know the business that you're investing in, you believe in the business that you're invested in, you understand how they make money, and most importantly, they are a business that can, be recession proof, meaning, how should I put this? Back when we had the financial crisis and they were bailing out banks, bailing out GM, Ford, and all those places, some places didn't need a bailout because they had enough cash to sustain them, And not only that, these are necessities. Like places like a Walmart or something like that, we're always going to go there. Just places that are going to be, needs based. Those are going to be the strong. I'm just trying to see, if I can get out, because I want to finish this video and not die. But, those are going to be strong companies to invest in. People who can survive a recession. People who, no matter what the climate, whether you're forced to live inside or and not come outside or whatever, these businesses will last. So anyway, those are the terms and the things I just wanted to go over, just some concepts. Yes, the market is low. The reason why you should invest because the market is low is because you can get good discounted deals on businesses that you want to invest in. Don't just think of them as stocks. Don't just think of them as shares. You're buying ownership into a business. So if you believed in this business and you just been wanting to get in it and you couldn't because of the price, well, this might be the golden opportunity for you to get in. So if you like this video, subscribe, hit the like button, follow us, the Idea Factory LLC, and Ben Elite Investment Club. All right, peace.
Get next to us if you want to get paid. Finna flood the whole game when we come with this wave. We heavy, way up, money steady. Pay up, are you ready? Flow cold like a Yeti. Say, bruh, pockets overweight, never blow the cake. Game recognized game and we know the fakes. High speed figures never slow the pace. Yo, we motivate, got dough to make. We heavy.